Imagine you're Juan, living in Buenos Aires. A few months ago, rent was capped by law and you thought you were saved. But apartments vanished, prices spiked on the black market, and landlords hid homes from formal listings. And then came a radical shift. So Juan, who struggled under rigid price caps, suddenly saw apartments flood the market and found a place that fit his budget. But the thing is, this isn't just about Argentina. It's a window into a general economic lesson. Sometimes capping prices raises costs overall. So let's talk about why that happens. Rent control is a form of price ceiling. That means the government sets a legal maximum price that landlords are allowed to charge for rent for specific apartments, and of course usually that rent, that ceiling, is set below the market rate. So let's say the market rent for an apartment is $1,200, but the government says that's too much. From now on, landlords are only allowed to charge up to $900. Now, at first that sounds nice, right? For tenants at least, everyone wins, right? Not quite, because here's the problem. If a landlord can only charge $900, but their monthly expenses like taxes, maintenance, sometimes mortgage add up to $1,100, then they're losing $200 every month just by renting out the property. Now ask yourself, would you sell lemonade for less than it costs you to make? The same applies here. Some landlords decide it's not worth it. They keep the apartment empty, others switch to short-term rentals or try to rent informally, illegally or in cash, just outside official platforms. Some also stop maintaining their properties. Because why fix a leaky roof or replace a broken heater if you're not allowed to raise the rent to cover the cost? And that's exactly what started happening in Argentina. The intention was noble, but the result, fewer listings, worse housing quality, and higher effective prices. And this isn't unique to Argentina. In New York City, for example, many rent-stabilized units suffer from decades of neglect. Elevators don't get fixed, mold spreads. Landlords have no incentive to upgrade the building if they're locked into below-cost rents. So yes, rent control might help those who already live in rent-controlled apartments, but it discourages new housing supply, and that in turn hurts everyone else. Now let's return to Buenos Aires. In late 2023, Argentina's President Javier Milei signed a decree which repealed the country's rent control law. That was a really bold and controversial move. The reform had several key changes. It removed limits on which currency leases could be signed in, meaning contracts could be written in dollars, not just in inflation-ravaged Argentine pesos. It allows shorter, more flexible rental durations, and it freed landlords to negotiate prices more freely, adjusting to market conditions. Now, the reaction was swift and surprisingly positive. In the months that followed, the apartments available in Buenos Aires jumped by 170 to 190%. And let's stop on that number for a second, because that's not a mistake. The number of available apartments tripled in just a few months. And the best part now is, with that jump in supply, the prices drop, at least in real terms. What does that mean? Real rent means rent after adjusting for inflation. If nominal rent, the number on your contract, stays the same, but prices and salaries in your country rise by 50%, then your rent just got a whole lot cheaper in real terms because you're earning 50% more and everything else is more expensive 50% more, just not your rent. So in Argentina, the real rent fell by around 40%, meaning people were getting more value for their money, even if the peso amount, the nominal amount, hasn't really changed. But it didn't stop there. Housing experts, like the most prominent one being Soledad Balayan, reported that in some areas, even nominal rents dropped because there were so many listings that landlords had to compete again. And also by mid-2025, Argentina's urban poverty rate dropped to its lowest level since 2018. So that's not just a housing win, that's an economic one. But let's pause here for a moment because something might sound strange. If rent-controlled capped prices at 900 pesos, for example, and landlords refused to rent back then, why are some of them suddenly willing to rent at that level or even below now that the market is free? Well, the thing is, it's not just about the price, it's about control and risk. Under rent control, landlords had no fixed contract lengths, no way to adjust for inflation, legal obligations to rent only in Argentine pesos, and very little flexibility if their costs rose. That 900 pesos could become 500 in real value in just a couple of weeks, and they were locked in. So even if the nominal rent was 900, the expected return was often negative. That's why many landlords chose to simply exit the market. But after deregulation, that changed. Now, even if some rents ended up at around 900 pesos again, landlords had the ability to adjust prices as conditions changed. They had the option to sign leases in US dollars, which are a lot more stable in value than the Argentine peso, and they had much shorter, more flexible agreements. So the total risk was lower and the upside was higher. The bottom line is that a rent of 900 under rigid conditions is not the same as 900 in a free market. So it's not just what you charge, it's how, when, and under which conditions you're allowed to charge it. And that changes everything. But let's address something many of you might still wonder. Wouldn't it still be better for a landlord, even under rent control, to rent out the apartment for $900 instead of earning nothing? That's a fair question, but the reality is way more complex. If your costs of renting out the apartment are $1,100 every month, but rent is capped at $900, you're losing $200 every month. On top of that, low-rent apartments often attract tenants that may not be able to afford to take care of the property, or they may stay for decades, locking the unit into low returns. So it's not just about money, it's about risk and long-term control. So many landlords make a rational decision, they pull apartments from formal markets. In Argentina, this happened en masse. Entire apartment buildings stopped advertising on official rental platforms. Instead, they appeared in Facebook groups, informal websites, or they were turned into Airbnbs. And this often resulted in higher actual prices. And let's be honest, this hurts tenants too. In places like New York or San Francisco, the same pattern repeats. Controlled units vanish from the market, repairs slow down, and the housing crisis worsens. So here's the core problem. Rent control treats the symptoms, not the disease. Yes, rents are very high in many cities, but slapping a price cap on housing doesn't fix why it's expensive in the first place. In economics, when prices rise, it's usually a signal. Demand is strong, but supply is limited. Capping the prices stops the signal, but not the shortage. That's why most economists argue that if you want to control rent, you must also work on supply, build more housing, offer tax incentives for new construction, provide subsidies for low-income renters, and fund maintenance support for landlords with tight margins. Some European countries manage rent control better than others because they pair it with these kinds of structural policies. But in most places, controls are passed without the necessary support. Think of it like this: if a bridge is collapsing, you can't fix it by just putting a speed limit in front of it. That's what rent control without reform is: a speed limit sign on a crumbling bridge. So let's summarize what we've learned. Argentina repealed its rent control law, and the housing market responded with a massive increase in supply and a 40% drop in inflation-adjusted rents. Price ceilings below market rates discourages landlords from renting out units, reduce housing quality, and create informal or black markets. Landlords avoid losses by withdrawing from formal markets or cutting maintenance. Fewer listings means more competition for what remains, driving prices up in hidden ways. And rent control alone doesn't work. If you want affordable housing, you need more homes, not fewer. You need smart design, incentives, and long-term thinking. At the end of the day, housing is not just an economic good. It's a basic need. People deserve safe places to live. But well-meaning policies can go wrong if they ignore market dynamics. Rent control might help some tenants in the short term, but if it drives landlords out of the market, discourages building, or even leads to decay, then even the beneficiaries lose in the long run. So if you want lower rents, don't just freeze prices. Build more homes, keep quality high, align incentives, and stop pretending that price is the only problem when it's really supply. So hit subscribe if you like clear, fact-based explanations of economic topics, and thank you very much for watching. Hope to see you in the next video.